website for farming sources and information sponsored by AgriGold. I am your host, Cesar Delgado. We're glad you're here on a Monday afternoon. We recap of the world supply and demand report with Jerry Giles from Midland for today and get talk to Tyler Shau from agmarkets.net. We were talking about the farm economy with Tanner Ehkme from CoBank. We were bringing you the audio from President Jimmy Carter on the Panama Canal in the year of 1977. The Panama Canal is top issue. We are going to have a conversation about the military personnel on the Panama Canal for the future. Otherwise, this is your rural news sponsored by AgriGold. The World Supply and Demand Report from the USDA is pretty bullish for corn and beans as well. However, the yield trends was pretty normal for the yield with corn and beans as well. However, the yield trends in Brazil for right now, it's bigger than before. In Illinois, Indiana, Missouri, they get some snow on Friday morning. However, in Arkansas and Oklahoma get some heavy snow for this weekend. Southwest states that they don't get enough of snow in Arkansas, Oklahoma. Finally, the administration has issued for 45Z from Washington, D.C., but next administration willing to give it up with the guidelines for SAF. This is your rural news for this afternoon. The President Jimmy Carter was signed a treaty on the Panama Canal. I read the article by Rolando Arida from NPR. Jimmy Carter was signed the treaty with the Panamanian leader, General Lomar Torrijos, in 1977. Where were at the time, there was some embargo with the United States. Here's Jimmy Carter in Panama in 1977.
Palabra al excelentísimo señor presidente de los Estados Unidos de América, señor Jimmy Carter.
Secretary General and distinguished leaders from throughout our own country and from throughout this hemisphere. First of all, I want to express my deep thanks to the leaders who come here from 27 nations in our own hemisphere, 20 heads of state for this historic occasion. I'm proud to be here as part of the largest group of heads of state ever assembled in the Hall of the Americas, Secretary General. We are here to participate in the signing of treaties which will assure a peaceful and prosperous and secure future for an international waterway of great importance to us all. But the treaties do more than that. They mark the commitment of the United States to the belief of fairness and not force should lie at the heart of our dealings with the nations of the world. If any agreement between two nations is to last, it must serve the best interest of both nations. The new treaties do that, and by guaranteeing the neutrality of the Panama Canal, the treaties also serve the best interest of every nation that uses the canal. This agreement thus forms a new partnership to ensure that this vital waterway, so important to all of us, will continue to be well operated, safe, and open to shipping by all nations now and in the future. Under these accords, Panama will play an increasingly important role in the operation and defense of the canal during the next 23 years. And after that, the United States will still be able to counter any threat to the canal's neutrality and openness for use. The members of the Organization of American States and all the members of the United Nations will have a chance to subscribe to the permanent neutrality of the canal. The Accord also gives Panama an important economic stake in the continued safe and efficient operation of the canal, and make Panama a strong and interested party in the future success of the waterway. In the spirit of reciprocity suggested by the leaders at the Bogota summit, the United States and Panama have agreed that any future sea-level canal will be built in Panama and with the cooperation of the United States. In this manner, the best interests of both our nations are linked and preserved into the future. Many of you seated at this table have made known for years, through the Organization of American States and through your own personal expressions of concern to my predecessors in the White House, your own strong feelings about the Panama Canal Treaty of 1903. That treaty, drafted in a world so different from ours today, has become an obstacle to better relations with Latin America. I thank each of you for the support and help that you and your countries have given during the long process of negotiations, which is now drawing to a close. This agreement has been negotiated over a period of 14 years under 4 presidents of the United States. I'm proud to see President Ford here with us tonight. Also glad to see Mrs. Lyndon Johnson here with us tonight. Many secretaries of state have been involved in the negotiations. Dean Rush can't be here. He's endorsed the treaty. Secretary of State William Rogers is here. We're glad to have you, sir. Secretary of State Henry Kissinger is here. This has been a bipartisan effort, and it's extremely important for our country to stay unified in our commitment to the fairness, the symbol of equality, the mutual respect, the preservation of the security and defense of our own nation, and contribution of cooperative. Before the American people in the future. This opens a new chapter in our relations with all nations of this hemisphere, and it testifies to the maturity and the good judgment and the decency of our people. This agreement is a symbol for the world of the mutual respect and cooperation among all our nations. Thank you very much for your help.
Then the Panamanian leader Omar Torrijos and the president. We recap of the world supply and demand from the USDA with Jerry Giles from Midland for today on Back Roads of Illinois. Hi, Jerry. How are you today?
Very good, Cesar.
Let's discuss about the world supply and demand report from the USDA. Could you tell us about it?
Well, it was quite a surprise for many people in the trade. Even it was smaller U.S. corn production and soybean production than my estimates coming into the report. So it turned out to have a very positive response to corn and soybean prices. I hope everything's going well.
Can you tell us about the Brazilian crop?
Yes, the Brazilian crop uh, has two different growing seasons going on. The northern areas are doing uh, good to even maybe excellent, while the southern areas are a little dry at this point in soybeans and corn.
Jerry, I have a question about the crop production in the United States. How do you expect the planting intention on March?
Well, I'd sense right now that we're potentially going to have a higher corn plantings than last year. Uh, the big question is, will it be 1 or maybe as much as 2 to 3 million acres because of the strong cash prices comparison to beans in the U.S.?
What the farmers is their respective?
Is the farmer's perspective on plantings or price? I'm not sure what you're asking.
Yeah, with planting.
Uh, well, that's what I said. This 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 year's post harvest prices have been stronger in corn, so that's why uh, the trade estimates really range up to 2 million acres or more on corn, while the beans would could go down the same amount, but because of the price relationships. Also, there's a lot more concerns about the incoming administration's tariffs impacting soybean prices more than corn.
What is the technical aspects on the report back on Friday?
Well, in the soybean side, the big drop of 1 bushel more in the U.S. yield was definitely unexpected, and that took down the crop size 95 million bushels. They didn't make any big changes in crush or exports from the back in November and that, but that 90 million, because of a slight increase in imports, did reduce the carryover supply projection to 380 million on beans.
How is the January beans for right now?
In January, soybean prices are kind of a mute point since uh, we're past the March beans is what we're trading.
Do you have any final thoughts on the WASDE from Friday?
Well, we didn't talk about the corn. Similar situation. Actually, the biggest surprise I've seen in years and years on a final production number, where they corrected their yield number by 3.8 bushels down to 179.3 for the U.S. average. That's up from 2 point uh, higher than they were back in last year. That and that did get trimmed back with some slight reductions in feed demand and exports down to a 200 million decline, down to 1.4. A very positive approach, but probably not extremely bullish at this point. We need to get down to 1.4 or less. The big factor in both corn and soybeans this in the January report reflects back the extremely low seed moisture that many producers experienced when they were harvesting the corn and soybeans this fall, where and soybeans were running closer to 10% than the 13% that is the standard level for soybeans for the best price. On corn, that number was also uh, in that 10 to 11%, or maybe a little, or 12% on corn when it's normally 15.5. That means we have less pounds being delivered, and so that reduced the yield, which is the really big surprise in here on the production report that we've had so far this last week.
Is there anything else that would like to talk to our audience on the premium risk for grains?
Well, I think the biggie here is that there's the current prices here on Monday have firmed up against some kind of magical levels that we've had on the technicals here into the 10 40 to 50 zone at $10.40 to 50 cent range in beans, and up into the 475 to 480 levels, and considering the fact that we have the incoming Trump administration being ahead of us here in the next week, and also some rains being forecast for Brazil, I would encourage producers to go ahead and push their sales up into the 60 to 65% level at this current time. There is a possibility with bad weather continuing in Argentina and southern Brazil, we could go higher later, but this market is right now, at least, on the high side of its recent ranges, and so it's probably a good time to take some profits and make some sales.
Thanks, Jerry. I enjoyed our conversation for this afternoon.
Thank you for giving me a call, and we'll see how this market once reacts over the next couple weeks. It's going to be interesting.
This is Jerry Giles from Midland on back roads of Illinois. We were looking at the back of us on the WSDE on Friday. We were talking with Tyler Shau. How are you after the report on Friday?
Doing good, Caesar. It was a busy day. It's continuing to be a bit of a busy day, or busy day today, and so busy days are always good days.
All right, the report is behind us now. Let's discuss about these markets for right now. Otherwise, can you tell us what's going on?
Well, the WASDE report was released on Friday, and I mean the big news that came out of that was that the USDA did lower the yield on corn by like 3.9 bushels or 3.8 bushels to the acre. There was a lot of people all year long that were wondering how we were going to get to a 183 to a 184 level on corn. That would be well over a 6 to 7 bushel increase over a previous record on yield. That's where the trend line is. That's where the USDA went with. And for a long portion of the growing season, the weather was pretty good for a lot of areas. Really good yields that did manifest themselves in Illinois, Missouri, parts of Iowa. There was some other parts of the country that were kind of telling us they had some struggles. They had some dryness that came in, crept in, probably led to a little bit of top end yield loss as well as some light test weight in some areas. And it just felt like the market or the USDA finally came and realized those numbers and pulled us down below 180. So I think moving forward, what we've got to look at is, are we in an environment where growing a 180 plus national yield is just going to be really difficult? Remember the last 4 or 5 years, we've been in that 170 mid to upper 170 range. And it does kind of feel like yields maybe tapering out. Maybe so far we've maxed out our technological advances. Now, barring, yes, you could always have that situation where you've got excellent weather across the whole nation and the whole growing region. And we'll have to see if that ever happens. But growing region is pretty big. So the results, we've got corn up almost 20 cents from pre-report. It wasn't all that long ago. The closing on Wednesday, the 8th, was at 454, and we have March corn settled at 476 and a half. So 22 cent move over the course of 3 days off of that news. Kind of changed the outlook on this market as we move forward on corn, and really the same for soybeans. Soybeans saw the yield drop wasn't quite as dynamic. We saw a bushel drop on soybeans over the December report, but that pulled ending stocks down to a much more manageable number. And when we take a look at the world numbers on corn and beans, we saw world ending stocks on corn as low as they've been in since 2014. Beans are really high on the world stage. That's a whole nother story and a whole nother can of worms with what's going on in South America. But all in all, last several days been positive for the American producer, and we could use some snow cover. We've not had much for snow. It's been a little bit cold. We don't grow a lot of winter wheat up in this country. You get down into South Dakota and there's a little more. They have had a little bit more snow, but there's a large portion of this area that's pretty dry. In fact, right now, we had Eric Snodgrass on with a discussion on the weather just a little bit ago, and he pointed out that currently there's more snow on the ground in southern Illinois than there is in North Dakota, which is not normal. So, I would say the winter wheat crop ratings up in this country, North and South Dakota, are probably not improving while they're in dormancy just because of the dryness, the lack of snow cover, and the cold. Now, as you move into the Central Plains, there's mixed reports. There's some reports where that crop is in good condition, went into dormancy in good condition. They've been getting some rain. They've been getting some snow. So right now, I don't see any reason to get super bullish wheat at the moment, but we'll have to continue to watch. One of the keys is there's some cold snaps coming in. There are some areas that don't have any snow cover, so winter kill always becomes an issue at that point.
How is the weather in the Dakotas, Tyler?
It's good. It's been cold the last few days. It's been chilly. It's going to be kind of chilly for a few more days, but for the most part, we've had a pretty simple winter. We haven't fired up a skid loader or a snow moving machine once to move snow. So a lot of times, by the time we hit mid-January, we've logged a week's worth of time in that machine pushing snow into piles. So we've been able to battle that all right. To be honest with you, a little snow wouldn't be all that bad. Just it is dry, so we definitely need to hopefully there's some precipitation, snow, rain, whatever in the forecast as we move forward. But so far it's been a pretty easy winter.
Let's see what's going on with the livestock markets on this afternoon.
Cattle had a softer day. Your feeders were down anywhere from $1.50 to almost $2 in some of your back month, your May contract. Fat cattle were down $1.20 to $1.30. Really wasn't any news. Cash cattle still remains hot. We are starting to see maybe some of that feeder cattle cash market temper just a little bit as these buyers get the cattle they need and some of the others are starting to back away. There really wasn't any major news on the fat cattle side. I still, want to watch that February fat cattle contract. 199.70, 75, I think was a record high way back in September of 2023, so well over a year ago. We're toying with that 199 number. A lot of people would love to see $200 fat cattle. I'd like to see it for our producers. We'll have to see if we can get over that threshold. But for right now, I don't know that there's any concern in the cattle markets. But they were a little bit softer today. Hogs, they have kind of bounced off of some of their lows, recent lows, early last week, and finding a little bit of support with this move in cattle.
How is April live cattle for right now?
April fats settled at 198.20, so that was down. It did trade up to 199.50 today, so the April board did kind of toy with that 200 level. Like I said, I wouldn't be surprised if we don't tick over that at some point. But boy, if you got cattle in the pen that you bought a while back and have not yet hedged them, these are pretty good times to throw some hedges on them.
Do you have any final thoughts on this afternoon's markets and demand report?
No, I think we kind of covered a lot of it. It did change the game. We trimmed 200 million bushels off of ending stocks in corn, so that's we're used to 25 million bushel changes in ending stocks. You take 200 off, now all of a sudden we're down to a 1.5 billion bushel carryout. I wouldn't be surprised if that doesn't creep higher rather than lower as we move forward. As maybe we start to deteriorate a little bit of demand, maybe we cut back on feeding cattle so heavy. Maybe we see a little dip in export demand, but we'll just have to kind of wait and see how things shake out.
Is there anything else that would like to talk to our audience on the cattle markets for right now?
I'll just reiterate that these are pretty high levels, lofty levels in both the feeder board and the fat board. Haven't had a lot of opportunity to lay off risk at these levels in the past. So, if you buy puts, you buy LRP, and you end up having to pay the premium, that means the market's going even higher than what are already, pretty much record levels. So, not the worst problem to have if you're in this business. There's a lot of air under this, so I keep banging the drum. At some time, at some point, the calf prices are going to tip over. I don't know that means we're going back to 180s on feeder cattle, but I don't feel they're going to stay at 270 forever. They never do, and so I'm going to take advantage of this while it lasts.
Thanks, Tyler. We're going to have a conversation about the farm economy with Tanner Ehkme from CoBank.
Great to be here.
How are you today?
I am wonderful, Caesar. Thanks for having me. How are you doing?
I'm great. Thanks. Let's discuss about the farm economy with the commodities markets for right now. Can you tell us for right now?
Well, there's a lot going on, as you very well know, Caesar, with the commodity markets. USDA had come out with its annual report last week. So let's just start with that right there about what's going on in commodity markets, specifically corn and beans. The story couldn't be any more different right now than what we're seeing with corn and soybeans. Corn has had a recovery in prices over the past several weeks and past few months, whereas soybeans has rather struggled. And although USDA had trimmed their yield estimates on both crops last week, and that caused a rally in the markets for both, I think the story is still intact here, where corn has got a more favorable price outlook relative to soybeans. And so the idea here is that there's more opportunity for the farmer with corn versus soybeans or even wheat or cotton or any number of other crops. That being said, even though corn is had the greatest profit potential. I think the story has been well told here that commodity prices at large are still down from their peaks. Just not so long ago. A couple of years ago, we were at multi-year highs, especially after Russia had invaded Ukraine. And since then, grain prices have been tracking steadily lower for a whole host of factors. Namely, we've got increase in supply, especially here in the United States. We have a stronger dollar that is inhibiting our exports. Our exports become more expensive. And at the same time, our cost of production has been rising in these inflationary times. Cash rents and the machinery prices have not come back as much as commodity prices have. And so as a result, when you've got this dislocation in the markets where you have falling commodity prices and resilient production costs, you're going to see a retraction in net farm income. And so that's been the story now for quite some time. And farmers are going into 2025, really putting their pencil to the paper, trying to figure out what's the best plan of attack in a marketing year ahead, where U.S. has got a lot of export headwinds coming at us with record corn and soybean harvests that are going to be coming to market from South America here in the next month, and that's going to be depressing commodity prices. So it's going to be a tight year ahead for a lot of farmers. Now, that being said, there's a lot of farmers who had record yields last year, and so they do have grain in the bin that they can sell. And if it's corn, then they're selling at much higher prices than they had a few months ago. Whereas with soybeans, not so much. It's been a tough row to hoe there. So the ag economy really depends upon what part of the country you're looking at, what commodities you've sold, what your marketing programs have been. Did farmers participate in higher prices a year ago, or did they not? But generally speaking, the lower commodity environment that we've seen with prices where your major crops, corn, wheat, and soybeans, has really eroded that profit potential for most farmers. And so we're looking at a year ahead where farmers are going to be relying on more outside capital, if you will, with operating loans. We're seeing that happen in farm credit. There's definitely an increase in interest among farmers for operating lines of credit. And that is speaking to the stress financial situation that we are seeing right now.
Are you watching about the grain cycle with your position at CoBank?
Absolutely. We're part of that every day of every week of every market. And, we follow what's going on in the markets. And so, as you know, agriculture is highly cyclical. And a lot of people refer to the 3-year cycle. For instance, we'll see a spike in prices and then 3 years of low prices and then a rebound. I'm hopeful that we'll see we'll get through 2025 and then we'll see a rebound in prices in 2026. I'm cautious about those kind of outlooks, though, because we have so many factors internationally now that are impacting the markets. We're seeing growing pressure from South America. That we see the dollar that just continues to strengthen. We're going to see perhaps a very large expansion of corn acreage in the United States this year.
Do you have any final thoughts on this farm economy with the commodities markets is down?
I'd say we need to take a close look at each commodity by commodity. No two commodities are the same. And so if you are in a corn and soybean rotation, or if you've got some wheat, I know in Southern Illinois, especially, there's some wheat country. It's really going to be a year of nimble marketing and nimble cost control. It's these type of marketing environments where you really find out who the good marketers are. If they know what an opportunity looks like, they chase it. And right now, we've got some opportunities out there, so it's really going to be incumbent on the farmer to really engage with those important relationships with their banker. Hopefully, they're banking with Farm Credit, with their accountant and their co-op on how they can really pull together a winning team to help them pencil in a profitable margin in the year ahead.
Thanks, Tanner.
Absolutely. Please reach out anytime. I'm glad you had me on.
This is Tanner Ehkme from CoBank. This is your closing markets for this afternoon, sponsored by Kyle Bumsteady's your commodity markets for Allendale Incorporated corn futures is up at 3 to 6 cents. Soybean futures is up at 5 to 10 cents on the quarter. Wheat futures is up at 5 to 4 cents. Let's take a look for the livestock market. Cattle is up at 3 to 6 cents on the quarter. Feeder cattle is down at 5 to 9 cents. Lean hogs is down at 5 to 10 cents. Thanks to all of the guests on the show. Otherwise, you can listen to the show on YouTube and wherever you get your podcast. This been Back Roads of Illinois. I am Cesar Delgado. You have good day.